Okay, this is part 5 of Ron Hosen Value Investing and a whole bunch of opinions that have to do with why you ought to be betting against America in the financial markets. First, I mentioned in an earlier segment about the parasitic industries. I went to college in the 50s. I went to Tulane. And in the 1950s, law school was basically a place for Jews who were too dumb to get into medical school and Gentiles who were just dumb. Now, people actually go to law school because they want to. Now, I've met a few lawyers in my life, and these people, apart from their specialties, seem to be vacuous. And I've known accountants, and my God, have I known financial service people. I mean, I've been investing. My niece, 14 years ago, when her grandfather died, gave me $50,000 that she inherited to invest for her. 14 years later, that the returns on that are $550,000. It's up by a factor of 11. She spent $350,000 along the way, and she has $200,000 left. And this is because I traded on her account for her. I was the only one. And I don't know what the hell I'm doing. Now, if I don't know what the hell I'm doing and I get a return that beats people who are successful on Wall Street, that is, your stockbroker, your 401k manager, I mean, these people can't get out of their own way. And yet they siphon off a huge portion of income. Now, it's okay. This is a good way to have fun. I have fun. That's why I've done it for free. But the idea is that it doesn't create anything. When they talk about crushing the creativity of the financial sector, I mean, that's an oxymoron. I mean, creative financial sector? Give me a break. What's happened is that economics and GDP theory has just been embodied as something automatically accepted. And when you have accountants, financial service people, college professors. I mean, I've taught 18 different college courses. And in all 18 of these courses, there were other people teaching who were stupid as shit. Or at least when they walk into the classroom, or when they give out assignments, or when they select a textbook. I mean, a textbook, just selecting a textbook. The idea of a textbook is just ghastly. It's as if they lose all contact with what they learned about their species and become androids. That is, they're like automatons. And occasionally they're entertaining. In the area of the sciences, and one area that I have followed is neuroscience. There's been some spectacularly good work done. I mean, stuff is understood now that can actually be a benefit to humans, done by other humans. Economics is not in that domain. These are people who live in their own world, and then they pass on these beliefs to the rest of the population. The exception would be like Schiller and Akerlof and Stiglitz. I mean, these are people who I think have some command of the way human beings interact and the aggregates that constitute economics. So, if you had people doing accounting, and accounting is simply a set of arbitrary rules for measuring something that needs to be measured but doesn't need to be measured according to the way accountants do it. I do my own accounting, and my impression is that it works. And I crunch the numbers according to my own system to determine the free cash flow. Free cash flow, incidentally. Now, if you don't say free cash flow at least 3 times, if you're a guest on strategy session, you won't be invited back. I remember in 1996, I went to an investment conference, and I went to a technology workshop, and the guy who was talking was pretty knowledgeable and talked about what various companies did. And he happened to mention IBM. And when he got through, I said, and they sell for 6 times free cash flow. And he looked at me like you would your 5-year-old nephew who just said something clever. And he said, they generate a lot of cash. And everybody else looked at me as though I had made some off-color reference to masturbation. Free cash flow. John Hagel from the Deloitte Center for Edge and Innovation. His institution has done a survey of American workers and concluded that 20% of them are passionate about their work. That is, passionate means absorbed and with a commitment to good performance. I used to teach for virtually nothing because it was so much fun. And the 18 subjects that I taught, I learned so that I could teach them. And teaching them was the way I deepened my knowledge of it. I did something like 2,000 oral exams so that students would be confronted with problems to apply the theory to. And that way I could trace through how they solved them and where the gaps were and what I had and what my deficiencies were. So that's passion. Let me suggest that that's the deficiency in the American economy. How much time do I have?
6.
Oh, okay. So let me give you an example. There's a good program on CNBC called Fast Money. And on there they have a rotating panel of 6 stock traders, and they have their MC who keeps very good control and runs it extremely well and who understands everything that's going on. And there's a good chemistry between these people. And I get a feel for the market, although I'm an inadvertent trader. I trade only because I'm afraid if I hold too long, I'll lose my profit, or because I've made a mistake and I need to get the hell out. But these are real traders, and some trade on their own account. well, there's no social redeeming value. But these are people that are excited about what they do. And that is valuable. That's good. And they produce a really entertaining program. I mean, that's valuable. You produce an hour of something really enjoyable for people who are watching, you've done something. What they do, on the side, that is, they're financial speculators, that has no redeeming social value. So, if you're looking to have a passionately committed workforce, I have a feeling that changing the tax laws is not going to be the solution. I think that's kind of like the Republican solution. Well, if you just change the tax laws, then everybody will be passionate, which means in the case of males, everybody would have a boner. That's not going to work. On the other hand, rational tax policy, something that would encourage investment, that is a good idea. And I think our political system is not capable of having that. So, it looks like if you have to be in the equity markets, and I think I only have about a year to live. I have a bad heart. I'm 73 years old. I have some unknown gastrointestinal problem. I'm recovering from foot surgery, and it may go bad. My teeth are falling apart. But let's assume that I live another year. I don't think you're going to see anything that looks very pretty over the next year. But if you're going to be in the equity markets, and I don't think the overpriced debt markets are the place to be, then look at natural resources. If you get a collapse of, say, Agrium stock or potash stock, these are companies that are in a sweet spot because of the burgeoning demand for food around the world. These are fertilizer companies. So, these are the things: oil, fertilizer, uranium. So let's see if I got anything else to throw out in my minute and a half. No, I guess not. So, bet against America.